What is the simplest financial advice you typically hear to become a millionaire and become rich? Buy an index fund and a tax advantage account, continue to buy it indiscriminately for a long period of time, and then wait 30 years and then retire. It seems so simple, but I'm going to show you why this simple advice will not actually make you rich, and it doesn't even work for the majority of investors despite its simplicity. And the reasons it doesn't work are not the reasons you're thinking right now. I guarantee that. As usual, none of this is financial advice. I'm not a financial advisor.
Knowledge.
As a therapist in real life, not on the internet, I get to see the emotional side of people. I see the decisions many people make based off their emotions, fear, greed, sadness, happiness, whatever emotion, these all affect our decisions. And the market is very much the same. There's a lot of emotional play when it comes to investing. You have news that sprout doom and gloom, fears of a recession, fears of 50% drawdown. Then we sell and then the market rebounds, of course. Then the hope comes, the hopium. We see everyone making money. We decide to use leverage. We buy triple leverage, QQQ, TQQQ, and maybe even make lots of money. But then we lose it all in a stupid Wall Street bets style fashion. The idea of buying index funds indiscriminately on market conditions and wait 30 years is so stupidly simple, it is actually very hard for the majority of people. The reason for this is your brain is not trained to throw thousands of dollars at something and then not want to look at it for the next 30 years. You want to manage it if you're putting money into it. You want to take care of it. You want to be invested. It's your little baby. You spent many hours working for hard-earned money, so how would you just ignore it for 30 years and just throw it on something if it's going to crash like 30%? Of course, we want to pay attention to it, but this is actually the worst thing we can do. It is no wonder the Wall Street cheat sheet stands true to this day. And if you haven't seen this image before, I highly encourage you to pause the video and look at it closely. How many times have you reacted to market corrections? How many times have you made poor decisions when fear and greed were at their highest? I'm assuming many times, like I have throughout my investing journey so far. But you have to remember, it doesn't get any easier from here. It actually gets harder. If we have a 20% correction, this is going to mean many different things depending on your portfolio size. If you have a $1,000 portfolio, a 20% correction, whatever, it's $200. You can make that back tomorrow at work. If you had a $100,000 portfolio, that's 20 grand evaporated until the market comes back. How will you react to that for a 20% correction? Are you going to want to dump more money as you're supposed to into the market, or are you going to be tempted to sell? But it gets even harder the higher we go up. What if you had $1 million portfolio? A 20% correction is $200K. Will you really have no emotional reaction to that? Probably not. You're probably going to reach a breaking point and sell everything out of fear. Look at your past actions during COVID, 2022, if you've been in the game longer, the past market corrections, and this will tell you the truth of your own behavior. So on paper, yes, index fund investing is very simple. Just buy and hold and wait 30 years, then bam, you're a millionaire. But our emotions typically get in the way and make this very difficult. Now, even outside of the market psychology aspect, your little dollars you are throwing at the stock market will not make you rich. In order to become a millionaire in 30 years, starting from zero, guess how much you need to invest per month for 30 years, assuming an average 7% stock market inflation adjusted gain. If we invested $100 every month, that's not even close. That gets us to 121 grand at the end of our 30 years. If we invested $400 per month, we're getting closer, but we're not even halfway there yet. We didn't even make it to 500K. Even if we double it to $800, we don't make it. We are so close, though, to that $1 million. In order to be a millionaire with an inflation-adjusted annual return of 7% per year, you need $820 per month invested in the stock market, totaling $295,200 worth of deposits over your 30 years. Now, I'm not using this to discourage you, but the focus of our financial well-being needs to be less on the investing side and more on the income side. How do you make more money to get that $820 per month? How can you make more money to invest more aggressively? If you're not even close to that $800 per month of spare capital, you need to make more or work on your savings. You can also think of it like this. Would a certification that cost me 10 grand make more sense to pursue if it significantly increases my income instead of using that 10 grand to invest? Should I pursue a different degree that would double my income, even if it costs some money? These are questions you need to start asking. You need over $800 per month for 30 years to become a millionaire. And that is going to be a lot easier if you are making more money. So focus on income, and then you can invest simply. And don't be a victim to your own emotions and typical market psychology. If you have no idea which index funds to choose, I outlined 3 simple funds in this video right here. Peace.